All right, we're going to go ahead and begin. And once again, thank you everyone for joining us here today. My name is Glenn Engelberg, and I am the Assistant Director of Recruitment for the GEM program. For those of you that may not be as familiar with it, the GEM program is a business and leadership degree through the Business School at University of Colorado, Denver, and it is a Master's of Science. Now, as we know, energy transformation, it occurs everywhere and really every second of the day. So today, the same transformation is seemingly happening with our industry markets, career, strategy, and it raises a lot of questions. What does this mean for us? How do we navigate these changes? And the GEM program, in response to this, has developed a three-part webinar series to discuss our energy transformation. And we're really excited to have part one today, which is building career resilience in the new energy markets. With that, we're going to go ahead and provide some tactical tips from our energy professionals, our three panelists actually, who will be joining us here today. And they come from all different backgrounds in the energy sector and bring a wealth of knowledge with them. We're going to go over topics from evolving your career in new energy markets to being resilient with the decline in natural gas and crude oil to tips for what new energy sector opportunities there are going to be post-COVID-19 and a whole bunch more. Now, in regards to the panelists, the three great panelists we have here today are first is Stephen C. Dr. Stephen C. is the senior human resource and energy executive, and he also teaches GEM's Strategic Human Capital Management in the Global Energy Environment course. We're also excited to have energy executives Bernadette Johnson, who is the VP of Strategic Analytics at Enverus, and Lance Titus, the Managing Director at Uniper Global Commodities, and we're very grateful they're here today. Now, in regards to the agenda today, since everyone's knowledge of the GEM program may be a little different, I want to start off by going over a few quick details of the program. It should only take a few minutes. And then we will have our panelist discussion here that Sarah Derdowski, GEM's Executive Director, will help guide. And at the end, we should have a little time for a Q&A section. So if anyone has any questions that come up during the discussion today, please feel free to jot them down in the chat box on your screen. We'll try to get to as many as we can at the end. And if we don't get to your specific question, we'll be happy to connect you with one of the panelists, or I can email you separately depending on what your question or concern is with that. Now, in regards to the GEM program, there are really three pillars of it and three focus areas. And really, it's not just a master's degree, but really an energy thought center and hub in Denver. The first, of course, those pillars is the graduate energy education, which is through our master's program, as well as our two graduate certificates. But we also provide a lot of professional energy education too, from being involved with some of the main energy organizations nationwide and in Colorado, to doing different training sessions, helping with policy, regulation, with local governments, and a lot more. We also have a public energy education too, where we have 2 free Coursera classes. And as a quick heads up, if you'd like a link to one of them, they're great. They're 2 5-week courses taught by actual GEM professors in different aspects of the energy field. And we do things like that, different panels like this, other ways to help keep energy professionals connected, right? Especially in a time like this. As far as the GEM program itself, it's really can be best thought of as a business and leadership degree for energy professionals or those looking to segue to the energy field. We teach all energy sectors from renewables, utilities, oil and gas, nuclear, hydro, really everything. And it's specifically designed for working professionals. And I'm sure many of you at home are juggling work, having kids being homeschooled, everything else. That's our typical student here. And as I mentioned earlier, it is offered in a master's degree as well as 2 certificates. And a quick note too, actually, I'm not sure if some of you have seen, but Hart Energy, which has a publication of energy graduate program rankings, just released theirs for 2020, and the GEM program actually ranked number 3 in the country, which we're really proud to see. As far as the way the program is set up here with the blended curriculum too, typically we will have our cohorts that will meet in person. Now, obviously right now with everything going on, we are doing things virtually for the time being until everything normalizes. But luckily, we've been doing a hybrid online format since 2008. So not our first rodeo, as they would say. But regardless, whether it's the online component or the in-person, it's meant to be collaborative and interactive and really, help to seamlessly transition with our students to work full-time while doing it. Also, with the way the program is set up, outside of that initial 4-day weekend, whether that's in person or virtually, the work is on a deadline-driven basis, and that allows our students to work full-time while doing the program and still finish it in about 18 months. As far as our faculty here, and Dr. Stephen C. Will be representing our faculty here, but here are a few others. The biggest thing is they're still in the energy field, and they have been for a long time. That's why they're leaders in the energy sector, so they know what parts are important, not just today, but tomorrow and in the future. And they really incorporate that into our curriculum and the different case studies and projects that we have that's really all application-based as well. All right, now, before we introduce our panelists here in just a moment, I really want to make sure that everyone has a chance to have a little input as well, too. So right here, I'm posing a question, what do you want to hear more about today? And if everyone can just hang tight for a second, I am going to go ahead and launch this poll right here. So you should see it right now pop up on your screen. To let you know, the answers are anonymous that we have for each one. So why don't you take about 30, 45 seconds, and once we finish this, we will continue with our webinar. All right, it looks like we got about a little over half the responses right now, and looks like about strategies to adapt my career to new energy markets and the steps I can take to become more career resilient with the decline in natural gas and crude oil are the front runners here. If this was like the Kentucky Derby, those would be the two leading the race, essentially. You know I miss sports one, right? All right, well, we'll give everyone a couple more seconds here. All right, and that, and actually, as everyone can see here, these were the results. So for our panelists today, and I know are paying keen attention, here may be a couple areas to especially focus on with our discussion today. And I know for Sarah, who will guide everything here as well. All right, and now I'm going to go ahead and hand it over in just a moment to Sarah Drodowski, who is the Executive Director of the GEM program, and also this past year in 2019, by the Denver Business Journal, was named one of the top 40 women in energy under 40 as well. And she even has that cool silver plaque to prove it. As you can see, these are our three wonderful panelists that we have here today. Sarah's going to have them introduce themselves, and we'll begin our discussion. One quick thing, as I mentioned before, if you have any questions during the presentation or the panel today, please feel free to jot them down, and I will get to as many of them as we can here towards the end. And thank you again so much for joining us here today as well. All right, so I'm going to go ahead and hand it over to Sarah. Hey, Sarah, how are you doing?
Great. Can you guys hear me?
Yeah.
Perfect.
You're just fine.
Well, thanks so much, Glenn. And again, a big thank you to all of our panelists for being here today, and for everybody who's watching online. That means you're home, hopefully healthy and sane. And so hopefully we can add some insights for you and kind of keep the education piece rolling, but also kind of keep you informed of what's going on in the markets and how you can better yourself during this time. So really excited to be here today. As Glenn said, we are very mission driven at the Global Energy Management Program, wanting to make sure that we drive good discussion and dialogue around topics that are pretty complicated. And there's nothing more complicated than energy markets right now. So really proud to have Bernadette Johnson bringing us some perspectives and analytic discussion from Enverus. A lot on the oil and gas side of the house. Commodity side, Lance Titus, thank you so much for being here. I know you're also doing a deal right now at the same time, so business does continue, people. So if you see Lance a little distracted, it's not because he's not in tune with you guys, we're still doing business. So excited, Lance, to have you on board. And then Dr. Stephen C., always a pleasure to have you. He's also our Human Capital Management Instructor for the Global Energy Management Program. And so we are brought to you from Minneapolis, Denver, and Lance, are you here in Colorado right now as well?
I am.
Oh, perfect. Perfect. So just to kind of get us kicked off, what I thought we would do is I would have our panelists go around. We'll do Bernadette, Lance, and Stephen in that order. Just kind of give us a quick 2 to 3 minute. I saw what, oil and gas markets were today, prices anyways. So Bernadette, why don't you just kick us off with like a quick 2 to 3 minute synopsis of what you think is happening today, and then we'll kind of move forward with some questions from there.
Absolutely. So I lead our strategic analytics team here at Enverus, and we're the largest energy data and analytics provider, and we're a software as a service company. So we're providing our services across the spectrum, from everyone to EMPs, OFS, midstream, government agencies, power traders, everybody in between, right? We're providing these services to. And so my team in particular, we track fundamentals, market fundamentals, supply and demand. So it's our mandate to figure out the price forecast for the company, supply, demand, all of those pieces. When the EIA numbers come out and the market's reacting, we need to react right along with it. So I think the market is certainly interesting right now. It's changing every single day. Today we have the OPEC meeting actually unfolding pretty much in real time while we're here. We're getting some initial information out of there. I think the market's been up, it's been down, it's been very volatile just today, trying to absorb that information and figure out what it means. It does look like we're getting some positive word that there will be some cuts. Those cuts will probably not start till May. There's certainly some more pain to be had. The cuts are also 11 million. Demand destruction today is more like 20, right? So that's gonna help, but it's not gonna necessarily save us. So I think that's also important. Where those cuts come from is also very important. So you're gonna see the market continue to interpret this over the next weeks until we actually see cuts. And you're gonna see a lot of price volatility in the meantime. So I think that's really where we're at in a nutshell. You've got, call it disease fundamentals from COVID and the demand destruction. You have the price war with Saudi Arabia, Russia, and others. You have talks now that a bigger group of countries, including some of the G20 folks that have a lot of production, might participate in cuts, but maybe they won't. So you've got a lot flying around right now. We would say that we're hopeful prices recover for crude to the high 30s, maybe 40 by the end of the year. It's going to take a while to dig out of this. For natural gas, though, we're much more bullish. We would say you're losing a lot of very cheap associated gas because of this upheaval in crude. And the demand markets for natural gas are really actually very strong. We're not seeing demand destruction on the gas side nearly like we're seeing it anywhere else. So all those things are positive things for gas, which means those prices are actually going to come up. So those are things to keep an eye on in our, I guess, our highest level view of what we think is coming.
That's great, Bernadette. Thank you. And we'll certainly talk more about your bullish stance on gas. And Lance might want to comment on some of that at some point too. But Lance, why don't you go ahead and do a quick intro and stuff as well, and kind of where you see where we are right this second as well.
Can you hear me now? Hello? Yeah. Okay. Sorry. Yeah, so for us, well, a little bit about myself. I'm the managing director at Uniper Global Commodities, where I oversee business development, origination, and structured transactions. We operate across the whole energy value chain, from the wellhead and to the generation stations for electricity to downstream full and partial load requirements, as well as direct bilateral customer engagements. So that also includes environmental attributes, carbon, and other products that may be required to comply with either air or renewable portfolio standards. So a little bit from our perspectives on the markets, it is business as usual for us. Obviously, electricity is still in demand. We have seen some changes in the use profiles, given the fact that so many folks are working from home or remotely. I would echo the sentiments previously stated regarding the bullish kind of stance on natural gas markets. We've seen some pretty steep contango that existed that is slowly starting to get tightened up in the market, and that, you know, with today's numbers coming in, I mean, price action is down about a nickel on the front, but in the backs, it's still relatively strong. I mean, looking at winter and summer, we think those prices will continue, winter 21, summer 21, to stay firm or stronger. And we saw those dips not too long ago when the real impact of COVID was starting to be seen across all asset classes. And then with regards to how we look at the global markets, we're active in the LNG space. So we're moving vessels globally, you know, sourcing US produced molecules, liquefying it in the Gulf. It's an interesting dynamic right now with all the floating gas that's out into the marketplace and where that may find its destination home, whether it be in the Netherlands, in the UK, or Japan, Korea, or Malaysia. And that's one of the things we're watching closely, because those spreads have kind of compressed as of late. And we think there's probably a little bit more room for compression. So then the question is, what does that mean to the gas here in the stateside? But like I said, we still remain, relatively bullish on the back end of the curve.
Yeah, that's great. That's great. And then Stephen, if you won't mind introducing yourself a little bit, and then, we've talked about markets here. So now let's talk about what that means on the career side, since you're our human capital guy.
Can you hear me?
Mm-hmm.
Okay, good. Hello, everyone. My name is Dr. Stephen C., and some of you on the call may know me already, and for those that don't, nice to meet you, virtually at least. First and foremost, I hope you and your family stay safe through this time, and if I can do anything to help you, you can get in contact with Glenn or Sarah, and I'll be glad to do anything around school or around business, answer any career questions you have. Be more than happy to do that. In terms of where we are in terms of human capital, there are a couple of areas. Since 2016, we've kind of seen a shift in skill sets. And why is this happening? Well, technology advances, more internationalization, if you will, and the push for a lower carbon future. We've seen some really unique and really interesting career paths taken out of this. So what is happening? Things like an AI business developer. There's one school that's offering this program, and I talked with them recently, and they had 24 geologists apply to be an AI business developer recently. So they're really reskilling. And I talked to 4 leaders in the energy industry recently, and there's a conundrum, if you will. They're going, we're probably going to have to let go of some of our employees due to cost issues and obviously COVID, et cetera. However, if we let them go and the market turns quickly and we need them back and they're working somewhere else, we're starting at ground zero again. So what do? This is a prime time for creativity and innovation, and with yourself and with your company. So there, it's a problem on one hand, but it's kind of interesting on the other hand for things that you could do around critical thinking and creativity and innovation. And as we go through this, as we go through today, you'll see some of the answers to some of the questions around skills. I'll show you some skills that we've researched and that will really help you become more resilient in your career.
That's great, Stephen. And I certainly know we've seen in the news at least some headlines from companies like Oxy and things like that, where companies are taking, or CEOs might not be taking a salary or things like that to cut costs and to keep people employed, or reducing salaries as opposed to kind of letting everyone go. So excited to kind of hear more along those lines.
I can tell you real quick that one of the ministers of a country that I actually spoke with 3 weeks ago, or about 4 weeks ago now, said that he said that, we don't want to let people go. We almost have to, but what happens if we lose the skills and the abilities that they have? How it's going to take us that much longer to he called it, to restock the company, if you will. So what do? So they're creating very innovative ways to keep people, and I applaud them for that, because it is going to be a huge brain drain if they try to let people go, then hire them back. They're not going to get the same caliber as they have with you at this time.
Yeah, that's so true. Well, to kind of keep us, the way I'd like to kind of run this is I'd really like us to talk about the market specifically, then move on to kind of some opportunities and stuff that the market's opening up. And, you already mentioned a little bit on one, Bernadette, when we talk about LNG or nat gas, and then kind of talk about, what that means for the career portion of it as well. And so kind of focus our conversations around that. But to kind of get us kicked off, Bernadette, on a little bit more of those specific topics and markets, this webinar is talking about transformation, right? And we are literally living through what that means. But, companies have been transforming the way they've been doing business. Investors have been transforming the way that they are looking at companies, and ESG is a big thing that we always talk about. So thinking about that, and from the investor side, when you're looking at the markets, how can companies right now be as transparent as possible, but also still being attractive to investors right now in a market like this?
Sure. I think I think it's tricky, and I think it depends on where you sit in the space. But if you're an EMP, I think the market's been trending towards more information. So this push to we need to live within cash flow, we need to return value to shareholders. That was a fundamental shift that happened a couple of years ago, and it's not going to go away, right? And the need for it was, if you always think that commodity prices are going to be higher, then you can always be taking on more debt because you're always going to get more for your barrels or your MCFs of gas. So you're always going to pay that back. So now what we see is there's a shift. If this lower price for longer and these price ceilings exist, then we need to be basically valued and evaluated just like every other industry would, on the strength of your balance sheet, on your ability to return capital to shareholders and provide value. And so that just means we need to be more transparent, right? The questions that are asked of other industries: what are your operations? What are your plans? How efficient are you? Where are you seeing success? Even things like when you downspace wells, or when you even upspace wells because you decide to be a little bit more conservative, there's a lot of cost savings per well that comes in. So communicating that, because you can have a smaller well type curve if you pay less money to drill it, and that's okay. You can still have a very positive rate of return, but telling those stories in a way that is accessible, that explains a lot of the nuance and the science that our industry is founded on, but that helps shareholders get a handle on what does that actually mean for value. Those things I think are more important now than ever.
Yeah, no, absolutely. And I think, like you said, transparency is being driven. It has been driven for a while, and now it just amplifies it a little bit more, just with even lower prices.
That's right.
Yeah, that's great. Well, I'd like to talk a little bit more about markets, but I'm going to give Lance an opportunity to chime in here in a second. But Stephen, let's jump over to you real quick. You know, you've been we're with Saudi Aramco for years and years on their leadership and development team. You've seen, this is not your first downturn that's happened in energy, although it's albeit a little bit unprecedented with COVID on top of it. It's a double whammy here. How do you see, or what are some of the key traits of leadership who kind of make it through these difficult times? If you could kind of pull out 2 or 3 traits of leadership, you know, what are those and who do those leaders look like?
Well, so if we look at some skills in terms of leadership and teams, you know, it's very important to have a growth mindset. And this is really based on the work of Carol Dweck. It's a learning mindset, and it's really more important than ever. And it's really about learning to learn. In people's lives, they are so busy, they get home from work, they're exhausted. But this is a time to take a step back and learn to learn. It's about critical thinking. And so I go back to when you mentioned the experience leading large teams, I go back to the fundamentals of leadership, if you will. And leadership is it's not a position, it's a behavior. And everyone has the opportunity to practice leadership, but so few people do. That's why we hear stories about great leadership, is because it's rare. And so that's why we hear these stories. It's rare. So I look for employees that do 5 things, and some of the audience will have heard these before, but I look for people that model the way, that do what they say they will do. Okay. I also look for people that will inspire a shared vision. They will, for their team, their small team, or for a larger department they may run, is to have a vision for that group and work towards it and talk about it every day. And I look for people also that challenge the process, that if you can do, and this goes back to the GE workout process that we had years ago, that we did at GE, about taking nebulous workout and focusing on what is the most efficient way to do something. And I guarantee you in the next 6 months, we're going to start seeing challenge the process, take the work out, because with cost issues now, we're going to start seeing people trying to challenge the process, and that is going to be a key skill. A couple of more: enable others to act, remove roadblocks for your employees, and allow them to do what they were hired to do instead of micromanaging and getting in the way. And the last is encourage the heart. The head, heart, hands philosophy is really find someone's passion and turn them loose. And I'm a very big believer in that. And this post-COVID era, and I hate saying that, but it's true. In the post-COVID era, it's about encouraging the heart. And the last key thing, if you don't mind if I mention here, is resilience. And that term it's a very small word with a big meaning. But if you get knocked down 7 times, get up 8. And this is what I used to tell my staff at Aramco. We had 160 plus in the learning and HR group. And I used to tell them, if you get knocked down 7 times, get up 8. Because after you're going to start seeing, we've already started seeing this around 2016, but the work ethic, 9 to 5 is now an illusion. You don't work 9 to 5 and go home. 9 to 5 is an illusion. And those that sacrifice the fun time, and I know that with millennials and Xers like myself, there's an amount of fun that you want to have. You want to live life to the fullest, but you know, it's all about priorities now. So when we think about work ethic, just think about 9 to 5 being an illusion. It's about doing things on a project basis. And so one of the final skills that I'll mention here going forward is, and even the larger oil companies now have started, especially Aramco, for example, have started focusing on projects instead of traditional hierarchy in organizations. So it's about flexibility and attitude plus energy. And you don't say things like, it's not my job. You say things like, how can I help? And Sarah, I know you've heard that from me over and over and over and over, but it's true. It's not my job. It's how I can help. And from a leadership perspective, it means stand out. And that's how you'll build your career resilience.
Those are great tips, Stephen. And I think, you know, we'll see which companies actually exhibit some of these great leadership skills. And then also, you know, some folks from within companies who actually stand up and start doing some of that as we kind of see how all this low price environment is treating companies and how they're getting through that. So, well, great. Well, let's wrap up a little bit on the market side. So Lance, just kind of wanted to follow up with you. Uniper's, you know, like you said, does everything across the commodity space, does things on the power side as well. Curious from your perspective, since you're seeing these global markets, perhaps how the markets might be responding differently in Europe versus the US, and where there might be some opportunities in those markets.
Yeah, so we're seeing, you know, definitely some demand destruction across Europe. You know, with regards to just Europe in general, close to about 13%, given this COVID situation. US has seen about 6% on the power side. And then Italy is one that's interesting. We're north of 20%. And, you know, I'm sure a lot of folks on the call have probably seen some of the statistics and countries that have been materially impacted by this pandemic. But, you know, as we look forward, you know, obviously we operate down to the spot markets, but we also are working, you know, 10 to 12 years into the future as well. And, you know, business in certain areas has slowed down on the transactional side. And on the other side, it's picked up in other areas. And what I'm seeing out there today is, you know, there's renewable development continuing to occur across the country. You know, a lot of things have been slowed down because disruptions in the supply chains. So as firms are thinking about whether they're developing the hardware that's required to, you know, develop these assets or mobilizing the crew to do the construction, a lot of firms are being very cautious to what that may mean to their staff. So, you know, we're seeing, you know, maybe 26 gigawatts of U.S. generation that may be, you know, slowed down that was otherwise planned to be developed or finished this year and into 2021. So, you know, those deals are also feeling the pain of the price curves, right? So the markets are definitely off. We've seen low power prices across the country. Matter of fact, this week was one of the first times that I've seen almost flat prices across the U.S., from New England to California, up to the mid-Columbia and the Pacific Northwest and the Heartland. So not too often do we ever see something like that, especially in the electricity markets. Usually there's some price differential within those different RTOs or ISO markets. But, you know, for us, the way we're kind of looking at the markets and how we're kind of putting our customers first is kind of the way we're looking at it. A lot of them, you know, in the E&P space are feeling the price impacts into their markets. We know the financial communities are also looking at what that means to the producing community and their access to liquidity to continue operations or choke in production. So, there's a lot of stakeholders here that are paying attention to, the tea leaves and how best to navigate through what I would call a market storm, and what the horizon looks like as we get better feels for how long this impact could last. Is it something that moves through August, or is it something that we see linger into 2021, and how does that kind of impact the overall term structure of price across the different commodities we're engaged in? When I think about the kind of theme of the call and the opportunity sets for folks that are maybe soon to be graduating or contemplating career shifts, and where energy fits in the opportunity space for employment. People need energy, right? When you think about whether it be oil, petrochemicals are a key component to a lot of things that get produced in daily use and consumption. So that's an area where there'll continue to be need. The renewables is continuing to move forward. We're seeing material impact and growth. Decarbonization strategies that are happening by corporations are specifically, we've noted, getting to net zero by 2035 globally. So, what does that mean? That means people that are, involved in the environmental space that can, understand sustainability strategies and how to best implement that. They're going to be in demand to help companies determine how best to mitigate those exposures. And then as well as, the continued penetration of the renewables, battery storage, transmission, infrastructure. These aging grids have transmission limitations that could, use significant upgrade. We've seen the infrastructure funds and private equity community look at it, developing those transmission projects. So those are areas where, they don't have to be specific in, technical acumen per se. These are skill sets that can be kind of cross-pollinated into an organization and leveraged. So, teaching a hard skill like finance, but having a specialization in maybe in environmental science or petroleum engineering or any other kind of skill, we look at those as people that can be, like I said, a utility player within the organization and move into roles where they can add value, but they have perspective.
Yeah, thanks, Lance. And that's such a great point. And I think that's the biggest thing that, we always try to promote as a program is that you're an energy professional, right? And what does that mean? And how do you fit in with this whole transformation of what's happening? Because markets are always going to change. They just happen to be super volatile right now. But knowing where you fit into that space is really important, and where you can add value. So, and that kind of leads me on to, maybe Bernadette and Lance kind of want to just chat a little bit more. You talked about a little bit how we're bullish on the nat gas market a little bit for when we're anticipating this recovery, hopefully in the next, few months, and what that looks like for the markets. I guess maybe talking a little bit more about, where there's opportunities for them to recover. Maybe it is on the LNG side, and then, morphing that into like career wise, where we kind of see maybe some stability, at least in those jobs. So Bernadette, maybe if you want to comment first.
Sure. Yep. Now I'm off mute. Okay. So I think thinking broadly about the question, I think where you are in the market, certainly there's nuance today. If we think about natural gas, if we think about LNG markets, those markets are global, right? Those markets were growing double-digit percentages demand-wise, which means also supply, before this happened. We've seen some cargoes get pushed, but it hasn't been widespread, right? So that is still a very booming market. And if you think about the reach of natural gas, how I tend to look at it is all of these commodities are intertwined, whether it's natural gas and power markets, natural gas and LNG directly, even NGLs, the propanes and the ethanes and all those products that sit right in the middle of crude and natural gas and that are kind of just along for the ride. All of those things are connected, right? And so when we look at our folks, the folks that understand that interconnection, that understand energy at a broad level, that understand some of these market dynamics where now maybe LNG might come a little bit more into favor. We'll see, right? Well, when you have certain things play out and you're losing and having crude shut in at such levels, you're impacting certain qualities of crude. Understanding the nuances there become very important in your ability to predict what happens next. And so I think they're very connected, right? And when we look at folks that succeed in this space and are able to jump into different commodities and understand markets and what's happening, that fundamental skill set is what you're looking for, is how do you look at a market? How do you interpret this data? How do you look skeptically at this data to figure out what is the noise? Where are there issues? How do we correct that? How do we make a decision from that? And so those core skill sets and the way that these markets are evolving are still kind of fundamentally what we look for, and fundamentally what really matters when you're in this space, especially today when it's so volatile.
I know, absolutely. That's perfect. And then, Stephen, I wonder if you can comment on from the human capital side of, we're at this post coronavirus outbreak, when we're looking at nat gas and some jobs and skills, like how people can position themselves if they're already within their companies who are doing some of this, maybe on a little bit more busy side of the house on nat gas, how they can position themselves a little bit better, either for some of those roles or to transition into some of those roles.
Some of the things that Mike, okay, good. Some of the things that we look at is the ability to cross-train. Since about 2002, we've seen organizations go from extremely hierarchical to more flat. And we're actually building models of organizations now that are extremely flat, maybe 2, maybe 3 levels to the CEO from the frontline worker. So how do you survive, not just survive, but how do you operate efficiently and effectively in an organization like that? And it's really about cross-training and getting functional skills in many different areas. If we look at some of the soft skills, for example, some of the things that we're finding right now is problem-solving decision-making is one of the skills that really lack in terms of that people lack in organizations. They sometimes they don't have the right knowledge or the right data, if you will, to make effective decisions. So teaching people how to do that is something that we're working on. Critical thinking, creativity, and innovation. Also interpersonal communication with everything becoming more global. We had, at Saudi Aramco, we had 161 people in our organization, and we had about 102 different nationalities. And we had to communicate almost daily with different nationalities. So any type of cross-functional communication skills are very important. So again, some of the skills, if I can summarize just a little bit, is problem-solving, decision-making, creativity, and innovation. But the ability, flexibility is another one, to be extremely flexible and doubly flexible now since the coronavirus, and try to have patience as well. But again, one of the things, and this is recent, but one of the things that we found is project management skills now has risen to the #1 skill that organizations are looking for, because if you're really flattening, you're going to have multiple projects going on. And with multiple projects, you need those project management skills. And several of the project management institutes that certify people, if you will, in that have tripled their certification courses in the last 48 months. So that tells you right there, not only energy companies, but most companies are going to more of a project-based approach. So I've advised a lot of my coachees, if you will, to focus on project management skills in addition to some of those that I mentioned earlier.
Oh, Stephen, that's a great point on the project management, especially now that we're all more dispersed, right? It certainly would be useful and helpful. Well, I want to hit on just a couple more points before we open it up for questions. And one is, Stephen, you talked about being resilient as an individual. Bernadette and Lance, I'm interested to hear what companies can do now to maybe stay resilient or be able to try to weather this storm. So I want to talk about resiliency of companies, of how they can do that. And then also, how do we actually forecast, right? How, everything's changing day to day. So how can we accurately forecast? Or, I guess forecast is just a forecast. It's not, a prediction of the future. But how can we start to plan in companies, plan for some of this resiliency as well, as we move through this uncertain time?
Sure. So I'll start. I think at the highest level, if you think about resiliency, or you even think about forecasting, I think it's really important to keep an eye on the end game, meaning that we are not going to have $25 or $20 or $30 prices on the crude side forever. We are not, right? There is a time limit to that. A lot of the unknown is how long does it last? And 90% of our problem right now with pricing is related to COVID. It's demand destruction. the price war, yes, right? But there's always supply, geopolitical price war things happening. I mean, this is extreme, but there's always something going on that's moving supply around. And the world has been fairly successful at managing that part of the risk. This demand risk is it's a whole new thing. We've never seen demand fall off this quickly at this magnitude. And so you're seeing this widespread disruption where wells are going to have to be shut in because there are no buyers. But all this means for us is that there is a lot of upheaval right now, but we will not have $20 prices forever. So there will be a recovery. So I think in the near term, I think you think of it kind of short term or nearish term and then longer term. And right now I would say near term means 2020. Like, what do we do to get through 2020? And I think a lot of that has to do with company by company decisions, but what we're seeing is capital gets pulled back. You don't want to burn cash right now, right? So you want to be doing things that are smart. You want to be prepping for the day when there are better prices. You want to be able to respond quickly when those prices start to come up so you can take advantage of that. But you may not want to burn through cash right now. You may want to get creative with how you handle your debt load. You might want to think creatively about mergers or acquisitions, right? This might be a very good time for some consolidation or for some new players to come out in the market and get some of these assets that might be going for a price that's lower than it would have gone before, right? So there's still details, activity, a lot of things that are going to happen even when we're in this time of upheaval. And then I think past that forecasting, that's the trickiest part, especially right now, because everything is changing so quickly. So for us, we go back to just fundamentals, right? We say, how much production would you get, knowing everything we know today about type curves and cost to drill? How much production would you get at $20 or $30 or $40 or even $50? Because once you can get your arms around that, then at least you can start to set some guardrails, right? Is there more risk to the downside? In the very short term, there is, but I think we're going to see a higher price. How high does it go? How quickly? There's a lot of data at our disposal, and a lot of these companies have that data. And so the hard part is sifting through it and having skilled people that can sift through that and figure out the important pieces. But we will see a recovery. The timing of that is a little bit in flux, but knowing that and planning for that day, I think that might be the biggest challenge right now. Is that right now it kind of feels like everyone feels stuck, like they can't make a decision. If you pull back a little bit and you say it's going to get better and you start thinking towards that, I think it's easier to make your day-to-day decisions.
Yeah, I think that's good advice, Bernadette. It's true. Sometimes you get caught in the weeds. It's hard to, without having paralysis, to be able to step back and actually take a larger look and make some decisions. So, Lance, I was wondering if you were going to be able to comment on kind of the forecasting part. I know Uniper just released their forecast in March, if that's something they're going to take a look at again or not.
Sorry, actually, I think this is Glenn here commenting in. It looks like Lance had to leave for a couple minutes right now.
Oh,
so,
perfect.
Actually, Sarah, if you may want to direct a question back
Yeah.
to Bernadette or move it to a different one for Steven until he gets back.
Yeah, that's not a problem. We can, I know, like you said, Lance is doing a deal. But so this kind of brings us on, Steven, over to you. And let's talk about, as we've talked about, you can't forecast necessarily, but, when we think of, HR and the strategies that they are presenting and what they're able to do as they kind of quote unquote forecast their workforce or kind of the workflow or what business is going to look like. What are some of their strategies that they're kind of working on right now?
That's a great question. And before I answer that, I want to mention something here that if someone asked me, they said, what skill do you need to be successful, not only in the energy business, but any company going forward? And I would say data, data, data. And why am I saying this? Because McKinsey said that energy companies will need more PhDs and data scientists than geologists in the next 6 years. And to me, that's astounding, that data science, and it's easy, for those engineers out there, data science is almost second nature to you. So it's an easy transition from your current job to a parallel job or a cross-functional job. And again, it's about moving laterally in the organization, not necessarily moving vertical now. So data, data, data. So that's the number one answer that I give my 4 people that I coach on a regular basis when we're talking in the energy business. Now, if we flip that and we say, what HR strategies do you see? That's taken a while to really research. And I would say, in addition to the soft skill development, the problem solving, as I mentioned earlier, I would say we're going to start focusing on compensation and benefit programs, and specifically around, in the energy business, around pay for performance. What do I mean by that? It means that you get paid for the level of performance you do, and it's a lot of it is subjective if it's not a quantitative, if you can't measure what people do, the amount of widgets you make. If you make 100, you receive 100% on your performance appraisal, et cetera. It's a lot about subjective. So what you really have to do, and what companies are doing, is pay for performance. You get paid on how you perform. Some people like it, some people don't. And they're going to start incorporating stretch goals. So as budgets become tighter, you're really going to have to start earning. Not that you weren't before, but you're going to have to start proving, rather, your worth to organizations. And again, by doing that is more of a lateral, cross-functional roles. You may have 3 or 4 different roles in a 4-year time span. Something else that we found out is post 2018, people are going to start changing jobs around every 24 to 48 months. So what can companies do to really keep now some people you want to let go? They're not the best and the most talented, so you don't mind them leaving. But the best and the brightest you want to keep, and that's different types of compensation programs and benefit programs. You're also going to start seeing you, in your role as managers and leaders, you're going to become HR experts, whether you realize it or not. You're going to have to start doing some of the administration around the HR components versus having an HR professional do it. Why? But there are too few strategic HR professionals out there. A lot of transactional, but not a lot of strategic HR folks. Lastly is the corporate university phenomena we're going to start seeing. We are already seeing less 4-year degree full-time, so less people going to 4-year degree full-time. They're working and going to school. We're going to start seeing the move to hybrid programs, which is what we do in the GEM program. But we're also going to start seeing corporate universities partnering with academic institutions to offer a joint degree. The organization skills mixed in with the university, what you traditionally teach at university, and marrying the two together. And we're already starting to see, for example, University of Colorado and National Scientific Data joint degree program. So it's a company and a university joint program. And we're starting to see those because the company wants you to learn specific information about the company and the academic information. So a very blended hybrid approach. We're starting to see those. So your diploma reads the company and the university.
Yeah, those are really good points, Stephen, there, specifically talking about how folks can have some targeted skills that they're going to do, but also what companies are targeting in their strategies to give some people some focus. I really just kind of have one kind of wrap up question, and it kind of goes a little bit back to the forecasting and stuff too. And it kind of alludes to our upcoming webinars and things like that, which are, we talk about strategy. And I know I had a question from Lenore, who sent me a note here that talks about scenario planning. Bernadette, I know we talked about forecasting. That certainly is not scenario planning, but wondering if you are seeing, we know Shell does some scenario planning, if COVID-19 perhaps, or a pandemic is ever a part of some of this planning that you guys do as you look at the markets. I know, like I said, scenario planning is different, but is that something that maybe Enverus kind of puts out there as part of their strategy, doing some risk assessment that way, as opposed to just looking at hard numbers and the markets as they look right now? Oh, Bernadette, you're still muted. Sorry. There you go.
So I would say, yes, we do it a couple ways. On our oil and gas analytics business, we certainly do it with fundamentals. And so it's really around, we'll put our view out, and then a lot of the value that we provide for our clients is not that specific number, but what is the upside or downside risk to that? What are the things that are at play that will change the price in the future, and how should you think about them? So again, this concept of putting guardrails on price forecasts or supply, demand, or thinking through things like efficiency of drilling and well productivity, right? How will that trend over time in different places? What about costs? I think in other areas of our business, like business automation, we have the largest business automation network in energy. And so we serve the vast majority of E&Ps, and we are basically processing electronic invoices back and forth. And there's a ton of data in there. So a lot of what that business does is we actually offer some analytics, and we offer the ability to help a company understand, what are you spending cost on? We work directly with their supply chain folks, for instance, right? So we didn't talk much about that part of the business on this call, but that's one where there's significant disruption around supply chains. We know that today. A lot of those supplies, wherever they're coming from across the country, are dramatically impacting all parts of the industry, whether it's steel, whether it's proppant, whether it's specific chemicals, whatever it is. That's always been the kind of this opaque part of our world. And that's an area where I think we're seeing more and more folks focus to figure out, how do we cut costs? How do we find the right goods? How do we move through that supply chain? How do we protect that risk? So that, I would say, is a little more kind of standard scenario planning around this supply chain risk and how do we manage that? And what does that mean in the future? It also means cost analytics, right? How much are we spending on this widget here versus here? You'll see very different costs all around the country, because so much of our industry is still kind of handshake deals or very person to person and relationship driven. And there's a lot of pluses with that. But there's also a lot of room to take that data at a higher level and figure out, where are the opportunities to be more efficient? Where are the opportunities to get these economies of scale that we know exist, that we're still marching up that learning curve towards? So I think that's a part of it. But I would say for us, we live in data, we live in analytics. We're doing scenario type planning all the time, whether it's for macro, whether it's for costs, whatever part of the industry that it's in. We're doing that pretty routinely, and that certainly is the way of the future, right? That's a key value of having all this data at your disposal, is you can really wrap your head around what happens next and plan for that.
Yeah, no, I think that's good. And, like I said, this is a great intro. It's the whole thing we could talk about on scenario planning of how companies could do that. But your supply chain example is really a point well taken there. And then I guess, just finally, I did get another question here. And Stephen, perhaps that goes back to, you talking about project managers and things like that. But as we look at, the way business is getting done, as, things are kind of put more in a project-based work, this sounds like there's a lot of opportunity for consultants. And so if that's true, do we kind of foresee that, maybe from your perspective on the HR side, that there's going to be a lot of opportunity in this new world or transformative energy market for consultants to have a lot more leverage or a lot more business?
We've been saying that for ever since I was in graduate school in the late 80s. We've been saying that, companies are going to be centralized, and we're going to have project-based, and everyone can be a consultant. I think now, I really do, since the COVID has really forced a rethinking, if you will, of how businesses operate. I really think there's going to be an opportunity now. If you are very technically sound, and you have great, again, going back to the project management and data skills, if you have those skills to lead projects, and what we've already seen is some consultants say, I want to work 8 months a year, and 4 months I want to take off and be with my family and kids over the summer. We see a lot. Matter of fact, one of my coachees, the people that I coach, that's what she does. She works 8 months a year. She's a project manager. She travels during that 8 months, but 4 months a year, the summer and the month of December, she takes off, and she works as a consultant leading project teams. Some members work for the organization. Some are other consultants that come in and work for her project teams. And so, yes, I think it's going to be more profound going forward than it has been in the past.
Well, that's good news for consultants, but I would also say good news for folks who are evaluating their individual skills to look to see, everyone sits in a unique spot in their jobs, and you probably see niche opportunities, because with downturn, there is opportunity as well. If you're sitting in the right spot to maybe jump in and start that LLC you've been thinking about for a while, and kind of get out there and circulate a little bit more. So with that, Glenn, I want to turn it back over to you. I'm sure you've gotten a ton of questions and things like that as we've gone through, and certainly want to be cognizant of everybody's time. If we can take at least a few of those, 5 minutes, 10 minutes here to answer some of those, I'll let you kind of steer those towards our panelists.
Yeah, absolutely. And thank you again to our panelists here today, and Sarah as well, for doing a great job guiding the discussion. And yeah, I do actually have 3 questions here from the audience I want to get to in just a second. Before I do, just kind of a quick plug for the upcoming webinars that we have. We will have our second one on April 23rd, and that will focus on electrification and supply chain logistics. And then our third one on black swan scenarios in the market and different energy trends will be in a couple weeks on May 7th. So we'll keep everyone posted on that, but just wanted to let you know. And actually an audience member actually just asked a question that's, I think, really interesting. Stephen, why don't we get your take on this first? They said, as an oil and gas professional, I'm a little concerned with going to, like, let's say, the renewable or utility side, because that company might see me as someone who will just go back to oil and gas as soon as the market gets rectified and clears up. What can I do, I guess, to kind of showcase my skill set that I'm very serious about transitioning permanently to a different energy sector, or at least not that I'll kind of jump ship as soon as things normalize?
That's a great question, by the way. But other than telling them that you won't do that, obviously, is modeling the way, walk the talk, demonstrate your keen interest in that area, and take on additional responsibilities, and really show a learning mindset. And if I can tell anyone out there to read Carol Dweck's book about a learning mindset or growth mindset, it talks about embedding yourself and really learning the business. And if I had to provide one sentence, I guess, if you will, it would be about showcase that you're interested in learning about that business and taking on additional responsibilities, and show how genuine you are about it. And I, as a head of HR, would probably say that might be a person we want to keep or either hire because, they have an interest.
Yeah, no, absolutely. It's great. Bernadette, would you like to comment on that as well?
Sure. I'll say that I interview a lot of folks. So I manage a team of 50, but I tend to be on the interview team for a lot of my peers and folks that other teams we work with internally. And so I think what we look for is we have folks routinely that are moving industries or considering it. And I think for us, we tend to look at it like, what core skills are you bringing to the table, most importantly. But also, how does that applicant tend to look at this opportunity? If this is just a job because I need a job to pay rent, that's less attractive than if I have a plan for my future and I want to get here and I'm flexible with where that looks in the industry, but I'm passionate about the industry, right? Something like that. Those folks tend to come off much cleaner. The folks that are clearer, if they have a plan, if they're willing to be flexible, if they're willing to take on certain asks and to the point of learning and always getting more knowledge, that becomes very important. So for us, I think that's never been a roadblock or something that we've said, hey, we're definitely not going to hire someone that's coming from another industry because what if they go back? It's really more about the individual, how they present themselves and how they're looking at this opportunity, and hopefully it being not just a job for a paycheck, but a career and a growth. And I want to be here for a while and I want to help. That definitely helps.
No, that's a great point. And actually, to that as well, too, I know we had someone ask, as an oil and gas professional, how can I position myself on social media, or just, while I have to be, in isolation with everything, to, I guess, not seem like I'm pigeonholing myself as much, so maybe they can get that opportunity to interview with you and not kind of be, dismissed, whether they're coming from utility to oil and gas or a certain sector. Is there anything, I guess, in particular that you look for, maybe when reviewing different applicants that, oh, okay, this is someone who has a skill that will be cross-functional?
So for me, I can start. I can say, well, those resumes are still so important, right? And not necessarily the exact format, but really, if you're thoughtful and you put together a resume that's specific for this job, that comes across. If you have one resume and you're coming from a different industry and you use a lot of jargon and you're still applying for this job and maybe your objective statement didn't change from the last one, so it very clearly doesn't fit this role, those can be very important, right? So those are kind of the showstoppers where then you get blocked and you may never get an interview. So I would say it is work to find a job, right? It is. And if you, especially a job you really want, it should be a good fit from both sides. And that tends to be how we approach it. We're selling you and you're selling us, right? This should be a good fit. And so taking the time to do that is so important. And I think that for me, that's the biggest thing, is that those resumes can be kind of a blocker, but once you get in the door and you're able to talk to folks, you're able to learn a lot more. So make that accessible, make it concise, Nobody wants a 20-page resume or to look at a 20-page resume. You want it to be tailored for this job. I mean, the kind of the core things you think about, but those things are actually very important. It's not just a kind of wrote up this memo and say, this is how you do it. It actually is very important for the people that are receiving resumes all the time.
Okay, no, absolutely. And actually, before I get to your comments on this, Stephen, I do want to let everyone know that I will send an email to everyone here after the presentation today with a webinar recording, so you can pause and play it whenever you like. And if you have any suggestions as well too, we're all energy professionals. This is meant to be collaborative. Please feel free to reply to that email that I'll send with any questions or comments that you have, or from future presentations as well. So, it looks like we got actually have Lance back as well too. So, well, I guess Stephen, if you want to kind of quickly chime in on this question as far as how let's say energy professionals can position themselves a little better on resumes, LinkedIn profiles, and then I'd love to get Lance's take on that too.
Two quick comments. Number one is, one thing that I look for, that I was trained many years ago to look for, is genuineness. How genuine is someone? And you can really tell that through a resume and maybe one or two discussions. You can really tell. If it's a stopgap career move, I can generally pick that up. And that's not someone we want to hire. But if they show a general interest in the job and ask the right questions and show a career path, like Bernadette said, show me a career path, what you want to do with this new job and new position. But I coached someone that was switching careers recently, and they were going from an HR career, and they wanted to go into the wind really energy, and they didn't have a job, and the company was going to train them. And I said, just tell them the truth. Don't try to have your resume fill it with things that aren't true, because number one, people can sniff that out pretty well. And I said, in the cover letter, say, I've never worked in this field. I have a passion for it though. Here's what I've done. And if you're willing to train me, I'm willing to do it. And they were hired within 3 weeks just by being genuine. That's what companies are looking for. A lot of them are willing to train you, but you have to show a keen interest.
No, that's great commentary with that there. No, that's a great story too. So, so Lance, I guess just kind of the comment on that as well. We were talking about, how someone can almost show that they're more cross-functional, not pitching themselves into a specific area just by looking at their LinkedIn profile or resume. Is there anything in particular as someone in a leadership position that you look for, when reviewing different resumes or interviewing different applicants, that maybe our audience can take as something to work on?
Yeah, absolutely, Glenn. And, I want to echo a lot of the sentiments that Stephen has shared today with regards to leadership and identification of high potential candidates and folks in the human capital space. But, when I think about, hiring, attitude is probably one of the biggest things I look for. Having a positive attitude and a willingness to contribute. A lot of folks, work hard. And I like to attribute working hard to working smart and truly understanding what needs to get done with regards to whether it be presenting the candidate in the best light and how they, portray themselves on LinkedIn through their resume or other social mediums that they use to kind of be visible out there as a candidate for employment. I think what's important is that, they do a reflective self-assessment and really understand the roles that these firms are looking to fill. And sometimes there's opportunities to define a role that may not already been contemplated by these companies. So they create their own role because they're solving a problem that relies in the pain funnel, is what I call, or the company's supply chain, right? So when they can identify where they can unlock value or add value, I think that's critical. And what I notice a lot is that folks need to think about transitory skills. And when I say transitory, it means things that they've learned across their career path and where they may be applicable in other markets or industries. So, whether it be credit, whether it be accounting, whether it be engineering, quantitative finance, all of those, and how they can utilize those skills in other areas of the firm that they may not have contemplated. So kind of opening up their perspective and not being so very myopic in their hard skills, but really being wise to their soft skills. Like when we think about, emotional quotients and how to really communicate effectively and understand how to read not only just body language, but inflection of voice and tone from neurolinguistic programming perspectives, but really being mindful to more now than ever is how to be a positive contributor. And there's ways to contribute quantitatively and also qualitatively. So really trying to think through if they don't have, a P&L responsibility, they can really articulate their qualitative contributions to the organizations or identify opportunities where they could unlock value, whether it be through a support function or direct problem solving.
No, those are great points with that. And I think that there's a lot more there to build on too. But just for the sake of everyone's time and of course our panelists and the audience here, I think we're going to go ahead and stop.